Thank you, Mr. President. I want to thank my colleague from Louisiana, Senator Landrieu, the chair of the Small Business Committee, who has been a great leader on this topic. And it's been my pleasure to work with her on this measure to try to help our struggling small businesses. Mr. President, I think Florida, maybe more than any other state, relies and depends upon its small businesses. We are the fourth largest state in the country, but we are a state that grew so fast, so quickly, that even though we have 18.5 million people, we do not have a lot of big businesses. The businesses in Florida, nearly 2 million of them, are small. Not one Fortune 100 company is headquartered in Florida. Now, we're trying to get there. We've got a couple that are on the cusp, and we will. But Florida had this meteoric rise in population over the past 20 or 30 years. It was built on construction and growth and tourism and all the reasons why people want to come to our beautiful state. But the jobs that have been created over the years, they're small firms. They're the restaurant, the local diner, the beach shop, the tailor, the laundromat, the auto mechanic. These are the businesses that are creating the jobs in Florida, many of them centered around the service economy. We're doing a lot to diversify our economy, but the truth of it is, Mr. President, they are the mainstream of Florida's economy, and they are struggling. This is the worst recession in anyone's memory in Florida, even worse than the recession that we had in the 1970s. Our unemployment rate peaked over 12%. It is still at 11.5%. And while this sounds strange, 11.5% may not be better than 12% in this circumstance, because what happens on unemployment rolls is that after a certain amount of time, people drop off and are no longer even looking for work. The truth of it is that if you are walking down the street in Florida and you see another adult walking down the street who's not retired, there's a 1 in 5 chance that person is unemployed or underemployed. Times are tough. There are some signs of life. Some things are getting better. But for Floridians, this is the most difficult economy that we've ever experienced. We have the second highest mortgage foreclosure rate. I just read recently that our folks are #1 in the country on being behind on their mortgage payments. So our small businesses, the creators of jobs, the folks that, as Senator Landrieu said, create 65% of the jobs nationwide, I bet you that number is much higher in Florida. They need help. And this bill is going to help those small businesses. Now, it's not going to cure the problem overnight. Let's be realistic. But it is going to help. Now, what the base bill does here is a lot of good things for small businesses. There are a lot of tax cuts in this bill. It's going to exclude small business capital gains by 100%. The bill will temporarily increase the further amount of this exclusion from the sale of qualifying small business stock. It's going to help something on carryback interest. It means a lot to small businesses. We'll extend the 1-year carryback for business credits for 5 years for certain small businesses. This alternative minimum tax hurts our small businesses. This bill will allow certain small businesses to use all types of general business credits to pay less taxes. Depreciation when they purchase equipment. It's going to allow them to accelerate that depreciation. When small businesses get to keep more of their money, they get to keep more of their employees, and they get to hire new ones. That's just in the base bill. This amendment that Senator Landrieu and I and others are working on is going to put money into our local community banks that will be lent to small businesses. Now, there's been a lot of confusion about this bill, and some of my friends and colleagues on my side of the aisle, they don't like it, and I hope they're going to come around. There is a concern that this is going to be similar to what happened in the TARP bill, but these two bills are very different, and this amendment is very different, and let me explain why. TARP went to the big banks who were failing at the end of 2008, a lot of whom were selling mortgage-backed securities and other exotic investments that they shouldn't have been selling, and they put their assets at risk and therefore put the American economy at risk. This has nothing to do with that. These are small banks. This is the banker you know down the street, the banker who's at your Rotary or at your Kiwanis, who you see at church or synagogue. This is not some Goldman Sachs banker. This is your local community banker who loans to the laundromat, to the tailor, to the construction business, the folks that employ people in your hometown. And this program is optional. No bank has to take it. If they are a small bank, though, if they have assets under $10 billion, they will get an ability to get some more money that they can lend out to small businesses that create jobs. That's not a partisan issue, Mr. President. We all should support that. And the money that comes back in is going to be repaid, and not only are we not going to increase the deficit or the debt, as my colleague from Louisiana just said, the federal government will actually make money on this. Boy, that's not something we hear a lot about in Washington. So it's not going to increase the deficit, it's not going to increase the debt, it's not going to increase taxes, it's going to lend money to local banks to loan that money to small businesses to help them in this difficult time. When I drive down the streets of Florida, whether it's in Orlando or Tampa or Pensacola, Jacksonville, Fort Lauderdale, Naples, all across the state, we've got a lot of strip shopping centers, just the way Florida was built. It's nice, you get to park in front, go in, buy your goods or services, go home. But you can see them from the roads. And when I drive down these main thoroughfares and I look over, what I see, Mr. President, is empty buildings. Empty buildings because our small businesses have gone under, because they no longer can pay their rent, because they no longer have the customers that they used to have, and because they no longer can get lending from their bank. Now, what is particularly of interest to Floridians about this bill, and I'm sure this is true in other states like California and Arizona and Nevada, other states that had this big real estate-based economy that boomed in the past years. What happens to your local business is that a lot of times the loans that they're getting now are tied to real estate that they own. They may own a small parcel in a small building where they operate their business. They have a mortgage against that property. They're paying their payments. But the asset, the real estate, has fallen in value tremendously. So now, when the regulators come in and look at the bank's books to make sure the banks are operating okay, they say, wait a minute, the mortgage that Joe's business has is technically in default because the asset their loan is against has fallen in value by 50%. And I have business owners coming to me all the time telling me that their banks are putting them in technical default because of the depreciation of the asset which is being held against the loan, which is their real estate. So this is an extreme and enormous problem in Florida. This bill will put more money into small banks to help lend to businesses, to help them bridge the gap until this economy recovers. Mr. President, I also want to talk a little bit about another portion of this amendment that I've been working on with Senator Klobuchar that talks about export promotion. Another issue that's not partisan. We all want more exports. Exports in Florida are a big deal. They are a huge part of our economy, being the gateway to Latin America. We sell our goods overseas. But small businesses, and even medium-sized businesses, whether they're in Illinois or Louisiana or any other place in this country, often don't know the services that the federal government and the Department of Commerce can give them to open up the doors of trade and allow them to sell their products overseas. So what Senator Klobuchar and I are doing in this amendment with export promotion, and she has done a tremendous job on this, is putting more resources in the Department of Commerce to go back to 2004 levels, because we've had to make a lot of cuts there, in order to provide more folks who can go out and show business how they can sell their wares, to create more sales so they can grow their business and hire more people. That's good for everybody's economy. I'm not a big believer in government spending, But when we're spending to help businesses pursue their economic and entrepreneurial opportunities, that's good for America. In fact, when the Department of Commerce spends $1 million on export promotion, their estimated return is $57 million, a 57-to-1 economic return. So that's just another very good part of this bill. I hope that we have an opportunity to vote on this bill. We may even have an opportunity to vote on this bill and this amendment today. Our leadership is working on, Mr. President, some other amendments. I hope that those opportunities will be provided. But this is a bill that we all should agree upon. It's a bill that should have 70, 80, or more votes in this chamber, and we should get it done because it would be good for the small businesses, the job creators of our country in their time of need. And I want to thank my colleague from Louisiana who has been a great leader on this. I want to thank her for working with me on this to lend my efforts to this bill to help to improve the bill in ways that I thought would be important for this country and for my home state of Florida. And I also want to recognize my colleague, Senator Klobuchar, who's here, and because she has done such great work on this export portion of this bill. That, Mr. President, I'll turn back my time to my colleague from Louisiana.